It all comes back to the DNA. The firms that know who they are will know who to be. You can learn a lot about an investment firm by listening to what they say. Alpco's Mainstream's AGM Originals, The DNA, Capturing Culture, is dedicated to capturing the DNA of a firm by listening to what they say. The first season of The DNA stars EQT, a global investment firm started in Stockholm in 1994 that has over 270 billion euros in AUM. I sat down for conversations with 9 EQT executives in Stockholm this past summer at their annual investor meeting. Each executive came from different parts of the firm and different parts of the world. Each had fascinating backgrounds and stories about how they ended up in private markets and working to build EQT. But there was a single through line threaded throughout all the discussions: the consistency and frequency that each executive talked about the firm's mission, vision, culture, and values. Episode 8 of Season 1 of The DNA stars Ken Wong, partner and head of Asia Pacific Infrastructure. Ken, welcome to the show.
Thank you. Thank you very much.
Pleasure to have this discussion. I think there's so many fascinating angles to how you think about building culture at EQT, the infrastructure opportunity in Asia, how you think about the different parts of the infrastructure opportunity set in Asia across the region. But first, I'd love to start with your background. Fascinating background. How did you end up here at EQT and in the infrastructure space?
So I started my career, like most people in the infrastructure space, at Macquarie. I worked at Macquarie during the global financial crisis, so during some tumultuous periods of time, which is always a good learning experience. I then joined a private equity firm, a Pan-Asian private equity firm called Affinity Equity Partners, based in the Sydney office. And then I got a call, must have been over 7 years ago now, seven and a half years ago, from a headhunter saying, EQT is looking to establish its presence in Australia. They're looking for someone to lead that business. Are you interested in it? And I'd been working in private equity. And so I said, I haven't got as much experience in infrastructure. They're like, actually, the way that EQT infrastructure operates is using a private equity toolkit to infrastructure sector. So actually, you're perfectly suited to help. And actually, a lot of your experience in the digital space, which is very much in the core sector that we focus on. It was also at a time where EQT had no real presence in Asia Pacific. We're the clear number one in Europe, very, very prominent, large in the US. In Asia at the time, we weren't the player of scale that we are today. But 7 years ago when I started, we had one small $1 billion mid-market fund. That was it. And we weren't the size and scale we are today. And so that opportunity to build something was really, really exciting.
How did you think about building and growing the infrastructure business in Asia?
Initially, the initial mandate was set up our presence in Australia. So at the time, I spent some time in Singapore where we did have an office, spent a lot of time in Europe, came back to Sydney in February 2020. So just before the borders closed, COVID hit. There was 3 of us in a very large office. I remember signing the lease to an office. We had 50 seats, and everyone's like, "You're crazy." And I said, "No, I think we're going to be a big presence in Australia across infrastructure, private equity, real estate, and we have big ambitions for Australia and Asia Pacific more broadly." Roll forward to today, we celebrated 5 years in Australia last year, and we have 50 investment professionals on the ground. So in 5 years' time, we've gone from 3 to 50. We've done $10 billion of deals in that space of time. Australia is, a microcosm of that broader growth story in Asia, and then EQT more generally. And having done that, was asked by Leonard and others to say, let's broaden the business. Let's do what we've done in Australia. Let's roll that out in Korea. Let's roll that out in Japan, Southeast Asia, and India. Let's build a real Asian business to be a complement to the very strong European and US presence that we'd already built.
Did you have to go about building the Asia business differently than Europe or the US from an infrastructure perspective in terms of how the market structure of Asian infrastructure investment opportunity is set up?
I would say, this is a little bit self-serving, but building the business in Asia has been much tougher than building the business in Europe and the US. I think there's been a couple of things that that we've needed to overcome as part of that journey. The first is there's just a language barrier that exists, right? We need to find people who are bicultural. They need to be able to operate in Korea, in Korean, in Japan, in Japanese, even though in India we've done deals there as well, and it's English speaking, but doing business in India is different from Australia, different from Singapore, different in Hong Kong, different in China. The Venn diagram is local with locals who can operate in their market, but then also be bicultural and understand the EQT way of operating. So we're fishing from a very small pool, and then we have a value creation toolkit that is very different from where everyone, certainly in this part of the world, has worked. The use of industrial advisors, full potential plans, all that kind of stuff. And then there's just a really long onboarding process. It's usually a 1 to 2 year process of working with me on some of my portfolio companies, sending a lot of our people over to Europe or the US.
What do you think about the culture that you've built? How do you think that value set and culture is transmitted as you continue to grow the business?
Culture is so important, and I know every single firm says culture is important, but I think you can feel it when you join EQT. If you have someone who joins, whether it's an associate or a partner, if they join, the first thing they'll always say is, wow, it's different here. When people join, I remember what my first lunch conversation on my first day was, it was one of the founders of the infrastructure strategy founder alongside Leonard. We had lunch on my very first day, and he said, look, Ken, one of the most important parts of our values is transparency. You can do the occasional bad deal. You do 5 bad deals, it's a different story. But sometimes we will make mistakes. We aren't always going to be perfect. But what we have zero tolerance for is a lack of transparency. And transparency, if your portfolio company is not going as well, we have over 30 years of collective knowledge in this organization, and everyone thinks about one team mindset. It's not about finger pointing around, oh, you did a bad investment, so that's on you. We collectively make investment decisions. We're an informal culture, we're a non-hierarchical culture. One of the things that I institute in my team, and it's a broad-based practice within our organization, when we're talking about investment decisions, about are we going to bring this deal to the investment committee, we always ask the most junior person to speak first. So we get the most junior person to say, what do you think? And we do that by design because, lo and behold, if you have an organization where the most senior person speaks, there's usually a pretty good consensus on whether we should do a deal or not. But even whether it's an investment decision, whether it's a hiring decision, one of the first things the junior needs to learn to do when they join EQT is get prepared to be asked, because in week 1, they will be asked, what do you think? Should we pursue this deal? What's your thoughts on it? And you better have an answer, because you're going to get caught up right from the start. My recommendation, and actually we've had some very large investors come in recently, and when they're doing their diligence, I just encourage them, just meet as many people as possible. And don't just meet the partners. I say to them, go meet the associate, go meet the assistant, go meet the receptionist, go meet anyone. I actually offer to, in diligence, I say, pick a name from the 130 people in infrastructure or wherever you want, and just sit down with them. And actually one of our investors actually did that. They would say the most engaging conversations they had were with some of the more junior members of the team, talking about why they chose EQT as opposed to maybe some names and more household or whatever. They were able to probably better articulate than I am about what is different about EQT. And so just meeting everyone is the best way to diligence the firm. But I think it's also really calling out when the values are not adhered to. And I don't mean in a nasty way or anything like that, but it's when the values are not met, it's really, really important that we say we don't have tolerance for some of those values. So that's one. That's on the, you could call it the stick. So one of the things that we always talk about is transparency. We have extreme transparency when we talk about this firm. And creating a safe environment to be transparent is not easy.
How does that transmit itself to the investment process and outcomes?
I think where I see what actually delivers for us is we become the partner of choice for management teams as well as counterparties. A great example is a deal that we did in Korea called SK Shielders. So SK Group is one of the largest conglomerates or chaebols in Korea. That is a company that had a majority stake in a business. They had a previous infrastructure partner that they were looking to, they'd come at the end of their life with a 5-year investment with them. They were looking for someone to potentially come in. We stepped in and we approached them and said, hey, we want to partner with you guys, but we're a control investor. We're a control investor because we want to put our independent board, our governance framework, our full potential mindset. And they actually said, we're really interested to learn about how to do EQT governance from the Wallenberg-backed EQT, because as some people may or may not know, in Korea, the Wallenberg name is a household name. Like it's always blown my mind that you go to Korea, you ask any business person, do you know who the Wallenbergs are? And they absolutely do.
Why is that?
So this is really, it's a famous story across all of Korea that in the 1980s, the chairman of Samsung, they were going through a bit of a restructure. They were going through a tough time. He gathered all of his CEOs of his portfolio companies. So the Samsung empire has hundreds of billions of dollars of assets under management, many subsidiaries. Stood up in front of his CEOs and said, we need to survive the test of time. We need to live for many generations. And there's only one family from the 1800s who are still operating that way, and that's the Wallenberg chaebol. They call them the Wallenberg chaebol. So we need to model ourselves off the Wallenbergs. And because Samsung did that, all the other chaebols and family-owned and conglomerates in Korea also stood up and took notice. So when the Wallenbergs come to Korea, they are super well known. And it's a phenomenal calling card to have. It's also a responsibility we have because we are associated with the Wallenbergs. We go to Korea and they'll say, oh, it's Wallenberg-owned EQT. What we didn't know at the time, which has been very beneficial, is that we had this Wallenberg advantage in Korea. We had this family industrial mindset in Tokyo. I was in Tokyo earlier this year where the Swedish ambassador actually gave me an interesting soundbite. The very first ambassador to Sweden was a Wallenberg. To Japan, that is. The very first Swedish ambassador to Japan was a Wallenberg in the 1900s. That's how deep the cultural ties go.
How important is that industrial business building, family-run, family-owned business mindset, long-term thinking come into play as you think about investing in infrastructure assets, which are long-term investments, and you're thinking over the long term and then partnering with particularly families in Asia to do so?
Yeah, it's super important because it's the only way that we are able to access assets and deals which would otherwise be held within those tightly held conglomerates or family groups. In Korea or Japan, a lot of those parties are very reluctant to open up to sometimes Western, forces of, the traditional, slash and burn, cost out type of organization. If they are going to sell their asset or partner with someone, they're wanting to know that they're responsible, they're trustworthy, they're growth minded because they're very much growth minded about the way they operate. And so having that reputation or being associated and building that reputation is super critical to unlocking those kinds of deals that just would not happen otherwise, particularly in places like Korea, Japan. But a lot of Asia operates based on that family mindset. We are associated with a family from the 1800s who are known. Sweden punches above its weight in terms of exporting a growth mindset because largely to a lot of the Wallenberg portfolio companies.
How are both family businesses in Asia, executives, and even governments thinking about the infrastructure investment opportunity? How does it kind of relate to what you just said around the Wallenberg family business that's been in existence for hundreds of years?
Yeah.
Across a number of different sectors, strategies, types of businesses. I imagine there's some parallels between how Asia is thinking about evolving when it comes to family businesses, governments, investors, operators. How do you think about those two things?
Asia is a very broad set of geographies and countries with different cultures. 60% of people in the world live in Asia. And then I think the stereotype of Asia, most people maybe think of developing Asia, but developed Asia is as big and as important in that equation, right? So it's a very broad geographical and cultural set of countries, which all have different priorities or different agendas in what they're trying to achieve in terms of a lot of our key themes of energy transition, digital investment. You have one extreme of digital investment where Korea has the highest fiber speeds, for instance, and have the highest 5G mobile penetration in the world. And then you've got developing countries where actually mobile tower infrastructure is a huge growth area because, in the archipelagos of Indonesia, you're trying to build as much mobile network technology to connect people.
How do you think about how to properly cover Asia from an investment perspective then?
Yeah, I think that it goes to the importance of building locals with locals on those teams. So we have people in Korea, Japan, Australia, Singapore, Hong Kong. We've done deals in India, but we'll have a team on the ground in India in the future. You have to have people on the ground. I think it's impossible not to do that. You have to have people who understand those local nuances of what you're doing. We also have to have people who understand what it means to invest in EQT sectors that we focus on, as well as our value creation toolkit.
When you think about the opportunity in Asia from an infrastructure investment perspective, you started in Australia.
Yeah.
And then have since gone and built out investment presence in other parts of the region. Why Australia first, and how have you thought about the continued march as you grow the business?
Yeah. And this was a decision that was made before I had joined. Actually, one of my colleagues who was sent from Germany to come down and start to start our presence in the infrastructure side in Asia. When he came in and did his analysis of which markets are really interesting, his first observation was we need to actually be very big in Australia for a couple of reasons. One is Australia was the home of infrastructure. Macquarie invented the asset class. There's a lot of Macquarie employees in infrastructure because, the privatisation of Sydney Airport, a lot of toll roads, that asset class was effectively invented by Australians 20, 30 years ago. That's the first thing. So it's just a very deep market. The second thing is we needed to have a test case of proving that the EQT governance model with the use of industrial advisors, an independent board with full of industrialists works. And Australia culturally is very similar to call it Sweden. You call it a big Sweden, you call it a small Sweden, depends which side of the argument you sit on.
It's interesting to think about and unpack the infrastructure investment opportunity in Asia. You mentioned that there's obviously different opportunities in different parts of the region, but in part that comes from these tremendous demographic trends, population growth, young and growing middle class, maturing capital markets, this element of take privates, particularly in places like Japan, different view on ownership and shareholder value and how to generate the best outcomes for companies.
Yeah.
I think there's probably a lot that can be transposed to the infrastructure side of it too. How do you think about how some of these mega trends are powering your infrastructure investment thesis?
I 100% agree with all of those things you have said. In addition to that, you have these other broad thematic tailwinds of decarbonization, and that is underway. AI, investment in digital, also underpinning a lot of those things. So you've got those big macro geographical tailwinds, which I think make equity investing really, really interesting, combined with these huge thematic tailwinds, which we're seeing in the globe, across the globe, and they're not unique. So I think it creates more opportunity for us across the region.
How much are those two trends linked? So the build out of the critical infrastructure in Asia, reinforcing the equity story in Asia, and vice versa, the build out on companies on the equity side, reinforcing the infrastructure side. Are those things kind of inextricably linked?
Yeah, absolutely, absolutely. So if I take an example of a company that we recently exited, it's a business called O2 Power, which is a renewable business in India. We grew that business from literally a handful of employees to 300 employees. And the reason it was able to do that is the Indian electricity grid is obviously the consumption of electricity, or electrification of the country is rapidly growing. You've also got very favorable government policy saying we're going to rapidly turn on as much renewable capacity as quickly as possible. And so India has actually created a very safe and strong investment framework of how to get as much renewable capacity into the Indian grid, which is why we've been able to scale so rapidly in that 5-year period and 5 gigawatts of signed and operating capacity in wind and solar and batteries in India, because you've got that huge electrification demand, favorable government policy saying we want renewables, structured a framework of how to bid for those projects that allow you at scale. They've invested also in domestic manufacturing capacity so that actually you're not completely reliant on other countries for your PV panels and batteries. It's all of those building blocks of success, which allows, I think, some of the largest renewable projects we see in the world at the quickest in terms of turnkey from project start to delivery.
You mentioned this rapid growth of a business in the infrastructure space. You'd think of that more on the equity side than the infrastructure side to some extent, but I think Leonard said something similar, which is infrastructure is not just clipping coupons.
Yeah.
So I want to touch on that, but before we do, I think there's a thread that runs through how you think about investing at EQT, which is this concept of active ownership.
Yeah.
Not just on the equity side, but it's on the infrastructure side too. So I'd love for you to unpack what that means to you as you think about partnering with operators and families and businesses on the infrastructure side.
Yeah. I think one of the misnomers about the infrastructure asset class is that it is a clip the ticket, safe, reliable, steady business. And actually, when Leonard started the business, there was a key philosophy that was applied. Whether it's an infrastructure company or a private equity company, businesses all have management teams, they have finance teams, they all have sales teams, they have digital capabilities or requirements. Why would you manage a infrastructure company any differently from our other PE businesses? It makes no sense. And we have a saying internally: if you manage a company like a bond, you'll get bond-like returns. If you leave it set and forget, you'll get those kind of returns. The key premise of what we did at infrastructure, what Leonard did in the 15 years ago, was apply a private equity mindset with all these tools that were developed in the 90s and 2000s on private equity, and apply them to infrastructure companies. Why wouldn't we go out and hire the best management teams? Why wouldn't we upskill from a digital capabilities perspective? You use AI to make our operations more efficient. And that idea 15 years ago was just non-existent. Using a private equity toolkit to safe and reliable sectors and asset classes. And I think that's the key of what the infrastructure asset class represents, or at least on the EQT side of things.
Do you think that it creates better return outcomes? Because when you look at EQT's infrastructure business, yes, it may be different from some other firms' infrastructure investment strategies or the way they operate their businesses, but the returns have looked more equity-like.
Yeah, we had this phenomenal private equity platform. Let's apply all those learnings on the infrastructure side of things as well. So when we come into looking at opportunities in the Asia Pacific region, and we're saying we are going to bring a global best practice way of operating that has been fine-tuned for 30 years, and we are going to bring that into the infrastructure asset class in Asia, that's really exciting in my mind, because I think that just means there's a phenomenal alpha that we can generate from the opportunities we're looking at.
You talk about what excites you and where you think you can generate alpha. What in infrastructure in Asia is most exciting to you right now?
Yeah, I think there's a couple of things that there's a lot of things that excites me in Asia right now. I think On the digital and energy side of things, it's really, really interesting. The use of AI in conjunction with the renewable energy requirements of those data centers, that's unlocking a whole bunch of opportunities. That's a common theme, but you combine that with a growing middle class, which is consuming all of those services. I think that's super exciting. The other thing that I think is super exciting is the underpenetration of infrastructure investing in Asia Pacific. In many of the markets, infrastructure as an asset class relative to, say, private equity is significantly underweight. There's significantly more growth in the infrastructure space. And so if we think that Asia Pacific already is underpenetrated from a private equity perspective versus Europe and the US, and then again, infrastructure is below that, it just means there's so many more opportunities for us across the market, combined with those thematic tailwinds of a digital and energy transition.
What does that mean for how the market structure in infrastructure in Asia develops? Is it governments trying to help convince more private sector players or private capital to come in and deploy significant amounts of capital? Is it creating partnerships?
I think that there is a recognition by most governments in Asia Pacific that private investment is the only way that we are going to bridge the capital needs to fuel the new digital economy, new energy transition, the onshoring or nearshoring of supply chains. I think that recognition exists. It's not about replacing aging infrastructure, it's just about funding that infrastructure that needs to happen. And I think most countries in Asia already recognize that that is a need, and being open to foreign capital is the case.
Is funding existing infrastructure need easier or harder than replacing old infrastructure?
I think it's easier. I think it's easier in some ways because you're incrementally building. It's easier to say, incrementally going to build something versus replacing aging infrastructure. That being said, Japan's as an example, there is an aging infrastructure problem in Japan. That there's a lot of stuff that, in the 1980s, a huge investment of infrastructure that's probably not taking place. Yes, there is high-speed rail and others, but there is other areas of infrastructure. We see that in the environmental space. We see that in the transport logistics space. There are pockets where there has not been, you've got some cold storage facilities that were built in the 1980s. They're coming up for end of life. But because there hasn't been as big investment and there's been a stagnation in the Japanese economy for quite some time, there is a requirement for new capital. And so I think we are even seeing in places like Japan, which have probably not been as open to foreign capital investing in Japan, it's opening up and changing materially. So we saw, the Tokyo Stock Exchange have these positive rules about if you're trading below your book value, you'll effectively get delisted. That's changing the mindset of Japanese corporates to say, we need to do something. And before, without that change of policy, most firms were reluctant to have a conversation with people like ourselves. Now, a lot of corporates are saying, actually, maybe that is an interesting way to unlock value in our organizations. The largest takeover in Japanese history is currently underway. 7-Eleven, which is an iconic Japanese business, you're seeing Couche-Tard approach that, and it's a bit of a wake-up call in Japan about what is the involvement of foreign private capital in some of these markets, and can that be helpful to unlock economic growth in that country.
What do you think is the hardest part about investing in infrastructure in Asia?
I think at the end of the day, deals probably take longer to originate in Asia. Deals are won from building trust and building reputations, or building a common understanding with a vendor who may be wanting to stay in. They take longer to build those relationships and unlock those deals. It means there are more unique proprietary opportunities that we're able to access. And I think deals do take longer, but at the same time, you're able to then unlock a proprietary opportunity outside of a process.
Because there's such tremendous growth in Asia, are companies and infrastructure assets being built faster, or is growth happening faster as well?
Yeah, Yeah, I think they are, because one of the benefits you have about infrastructure companies in Asia is in terms of supply chains. That's a lot of solar farms and a lot of batteries that we're building, but the supply chains are all within Asia, operating at a very fast pace. But I think being close to the source of a lot of the supply chains is super helpful in scaling rapidly. I think that it definitely means that you can grow some of these businesses faster.
You talked about Asia being maybe 5 or 10 years behind other markets from where the infrastructure investment market is. If we roll the tape forward 5 to 10 years from now, what do you think the Asian infrastructure investing market will look like?
I think that's still probably going to be the case, because I think the size of the opportunity is so great in this part of the world that even with all the capital and other players coming in the market to fund these opportunities, it's still not enough. There's so much opportunity that you actually need even more capital, as well as those thematic tailwinds of energy transition and digital in Europe and the US as well. It just means that the needs are growing so significantly that I'm not sure we will necessarily in Asia be able to catch up in the next 5, 10 years' time. Maybe in 20 years' time we'll have a different conversation, but certainly not right now.
What would you tell LPs about investing in Asian infrastructure if they'd maybe had more familiarity with US or European infrastructure investing?
I think the first thing I would say to them is Asia is a broad, again, it's a common theme when I always talk about Asia, even with our existing investors. Asia is a broad set of markets, and at least where we focus on is developed Asia as our primary, Australia, Korea, Japan, big economies, same thematic tailwinds as Europe or the US. So if you're thinking about investing in Asia Pacific, at least with EQT, it's actually not too dissimilar to investing in Asia, in Europe and the US, except there are probably some more thematic tailwinds or population growth or rising middle class that help some of these opportunities. So the first thing I would say is not all Asia is different, at least, and what we're focusing on from a risk perspective is very similar to Europe and the US. I think the other thing that I would say is there are more opportunities in Asia because of that middle class, but also as we're seeing currently in the destabilization of geopolitics and the like, is that Asia is likely to be the beneficiary of some of these reshaping of global economic forces. We have 60% of the global population. We are seeing a lot more focus and investment moving away from some other markets into the Asia Pacific region. I think that's, when we're talking to investors, they're talking about, if I want to diversify my portfolio, and where maybe I've historically focused on Western markets, actually Asia offers great diversification, great growth, and actually the risk profile is similar to what I'm getting elsewhere. It's just a little bit of a hidden gem in maybe why they haven't allocated to Asia Pacific infrastructure before.
A hidden gem that's been uncovered.
Exactly.
Thanks,
That's exactly
Ken.
it.
This is a great conversation. Really enjoyed it.
Thanks, Michael. Appreciate it.
Thank you for listening to this episode of The DNA, Capturing Culture. You can stream all the episodes on your YouTube channel at altgoesmainstream AGM, or read about the episode at my Substack at altgoesmainstream.substack.com. And of course, special thank you to EQT and the executives that shared their stories and perspectives. Thanks a lot and have a great day.